talked about WeWork, we talked about banks going bankrupt, we also talked about crypto exchanges. Can you name the high profile brick and mortar stores that also went under this year?
Yeah, so Party City. There, I mentioned Spirit Halloween before. That's what are the odds I mentioned both of those things right after Halloween too. Rite Aid as well. This isn't brick and mortar, but Diamond Sports Group, which was it was created after the offshoot of Disney's acquisition of a bunch of Fox's assets, and it was formerly Fox Sports Regional Networks, but now they were Bally Sports, and now that went bankrupt. So that's not brick and mortar, but that's also a very high profile one. We've seen it's something like, I think it's like 40 NBA, NHL, and MLB teams. That's where they broadcast their local games. So we've certainly seen some big ones. And then it was last year, Cineworld, which is a British chain and parent company of Regal Cinemas, that went bankrupt as well. So yeah, there've been a lot.
So we see this trend, we see this pattern. What should be our takeaways? What should we, glean from this?
Yeah, I mean, I think, well, I mean, number one, and not to be too much of getting like investing, but I think it's also like, if you're investing in something or just generally like evaluating a company's health for any reason, I mean, it's always cash burn is I feel like that's the number one bad sign. I mean, I think that's more like Warren Buffett would say that. I mean, it's companies' free cash flow, and if you're losing cash, it's really hard to recover. And that's not to say that it's impossible. I mean, we've seen Uber, DraftKings have had really, really strong years after many, many quarters of losses. So not to say it's impossible. And I mean, many of the, early stage companies are going to be losing money. And I think overall, I think it's a good lesson too. If things feel pretty good right now, if you're looking economically or you're looking at the stock market. But it's a good reminder that, this isn't just like boom times that everything's awesome. There's still very much, there are some issues, and it is a pretty challenging environment for, consumers and companies alike with higher borrowing costs.
I think anyone can see that. I mean, consumers, voters I'm talking to, speaking from the political side, they're feeling that squeeze in their pocket. But as interest rates fall, if they do, will we see bankruptcies decline?
Yeah, I think it's fair to expect that. I mean, again, I think there's certainly a correlation there. I mean, of course, you could see kind of a lingering effect of if a company's been having to pay higher interest rates on their debt for several years, then we could see in 2 years from now a company goes bankrupt ultimately because they had to pay higher rates now. I mean, like you could kind of see that accumulation of issues for companies that have to pay higher rates for longer. But yeah, I would very much expect if rates are cut, or I mean, even if, I think so much too is the uncertainty, and I think that's why we've seen over the last week or two there's been a lot more optimism, because it seems like that rates won't get higher than this. I mean, even if they kind of hold steady, it's the devil is better than the possibility of it getting so much worse.